Now, if you looked at what we went through today in ES, we had a lot of confluences why the market would have had a short-term high formed and potentially have the weekly range capped. And what do I mean by that? Some of you may have not understood what I said earlier, and maybe you haven't gone through the core content lessons, and maybe you haven't kept notes. Maybe you didn't hear me talk about these things in other lectures and such. But when the market has a one-sidedness, in other words, for the weekly range, if the majority of the weekly range across the daily candles has been predominantly one direction, which is pretty much what we've seen since Tuesday, generally, not always, but generally, Thursday's morning session, and this works in Forex too, so don't think that it's just something that works only on futures or index trading. But generally, the New York session, morning session specifically, will tend to create a intermediate term high or intermediate term low. And that may, in fact, become the actual opposite end of the weekly range. Not all the time, but even if it trades higher tonight and goes higher than today's intraday high. I believe the high was 4087.75, so we failed to get to 4088 today. Never printed. But if we go above it overnight tonight, it's okay, because you've seen how that morning session proved to be a tradable condition. In other words, we've seen an intermediate term high intraday, and it traded down to an objective that we were able to outline. You watched me do that in the live stream. And two of the targets, the two of the discount arrays that I outlined, traded to beautifully. And I screenshot it as it was slamming into the sell side liquidity pool. And it only went one tick below that from the time I screenshot it. And then it traded right from there all the way back up into the morning range, very close to the high of the day. Now, if you look at a day like today and you're arm wrestling with how maybe you were trying to push the button, maybe you were trying to participate in the morning session move lower, and maybe that created an issue for you in terms of fear of missing out, fear of getting it wrong. Hold on one second. Usually I put on my do not disturb because people like to call me when I'm doing these things. I know the text message from someone I don't want to hear from right now, but I'm going to talk to when I'm done. Not a hater. But if you were looking at this morning and you felt bewildered, chopped up, second guessing everything, that's okay. There's nothing wrong with that. In fact, that's how you should feel. That way, you will see it again in the future, and it'll prevent, hopefully, you from doing an over-leveraged trade. You don't want to be doing things in the marketplace when it's like that with high leverage, which is the reason why I mentioned lower your expectations. And I read some of the tweets in response to that live session, saying that you got chopped up, saying that you're down a little bit, that you're frustrated and you don't know what's going on. Well, you're pushing a button when I told you not to push the button. And now you're bringing emotions into it, which is exactly what I said would happen if you did that. Now, for the folks that didn't push the button, you can see how you probably have spared yourself a great deal of aggravation and frustration because you didn't go into it with casino time mentality. You're in there observing, trying to learn. The takeaway from today is, yes, Even inside all that mess, if it starts to move lower, we can see where it's going to go. But the problem is you have to wait for a lot of confluences, which they materialized today, as I mentioned, with the S&P divergence and the new week opening gap that it traded up into, all the other factors that were listed in that tweet. But you're not being invited to gamble when it's like that, because it could just as easily went up there and traded above that new week opening gap. In fact, it might do that overnight tonight. What's preventing it? Nothing. ICT's not. You aren't. Your will, my will, or my expectations or want for the marketplace to deliver a specific way, that's not going to be a factor. And today, what we saw in the morning session is a classic depiction of what it's like when the market presents an opportunity for you to hook up an arm wrestling match, your will against its will. And as you can see, the market's will, it shall be done. And if you're not in alignment with it, it hands you your hinder parts, your backside, your tail feathers, if you will. And maybe you thought you saw something today. Maybe you thought you saw something that was contrary to what I was pointing out, and you found out that that wasn't a good idea either. And it's also a learning lesson for you. I talked about that in the live stream today. So I'm not convinced that today scared most of you into being more diligent about picking better market conditions. I think some of you still seen the outcome of where it traded to later in the day, and down to our objectives that we had for discounts. And you thought to yourself, you know what, I don't think I'm going to be intimidated next time I see a trade like this. I'm going to go and I'm still going to push the button. If I just would have pushed the button today, I wanted to do those trades that he was talking about. And I could have went short and I could have did this and I could have did that. Yeah, you could have. Absolutely could have. And you could have failed. And you could have got stopped out. And you could have got scared because it was chopping around as it was dropping. And what you're feeling and what everybody else is talking about too. Listen, even to the people that don't know what they're doing, they're all saying the same thing. Man, this market, man, this price action, man, this stuff is really upsetting me. So it's not just you, it's not me, it's everyone that's looking at price action. We all see it, we all feel it. Something seems amiss, right? Something feels just a little bit off, like something's not running like it should. And whenever you feel that, whenever you see it or experience it, and you observe it in price action, it's really important for you to, number one, acknowledge the fact that you're observing and you feel that there's something amiss. That's your first indication that your experience is now speaking to you. And then invariably, what will happen is the new students, the new traders, will quickly dismiss that as, oh, that's just me trying to be nervous or scared or second guessing myself. The only answer to that equation would be just to get in there and just push the button. Go with my gut feeling. And then you find out that's not something you should have been doing either. You're not guessing. You're not trying to gamble. The market has to present something logical. So it has to be very clear. It has to be one-sided, where it cannot be, and this is what I'm taking you back to in this discussion here, it can't be sold to you in the sense that you can see a buy or a sell. Because if you can do that, that is by definition an ICT low probability condition.